Ever wondered what happens when you finally take money out of your 401k? The tax implications can be a huge surprise, so let's clear up some of the most common and costly mistakes people make. First up, a big one. If I live in a state with no income tax, like Alaska or Florida, does that mean my 401k withdrawal is tax-free? The simple answer is no. State and federal rules are totally separate. While you might avoid state income tax on that withdrawal, the IRS almost always considers a traditional 401k distribution as federal taxable income. All those local perks, like no sales tax or even an Alaska permanent fund dividend, don't change how the federal government sees your withdrawal. Next, let's talk about big withdrawals. Someone asked, I made $120,000 this year and took a $180,000 hardship withdrawal to buy a house. Is my income now $300,000 and taxed at that high bracket? Well, yes and no. That $180,000 distribution is added to your other income, so your taxable income can jump dramatically. But the US uses a marginal tax system, meaning your income is taxed in layers. Not every dollar gets hit at your highest rate. Only the top portion of your income falls into that higher bracket. Still, a huge withdrawal like that will significantly increase your tax bill and can push you over other income cliffs, like triggering Medicare premium surcharges or phasing out tax credits you might have counted on. For those already in retirement, a common question is, I'm 73. How much tax do I pay on a $5,000 401k withdrawal? The honest answer is, it completely depends on your total income for the year. That includes your Social Security, any pensions, and all other distributions. For some people, that $5,000 might be taxed at a fairly low rate. For others, it could be the exact amount that pushes their Social Security benefits into taxable territory. The key takeaway is that a withdrawal isn't taxed in a vacuum. It's part of your entire financial picture for the year. Here is another point of confusion. How much interest will they deduct upfront if I withdraw at 59.5? This question mixes up two different things, a withdrawal and a 401k loan. Withdrawals don't have interest. Loans do. When you take a loan, you pay interest back into your own account over time. What you might see with a distribution is tax withholding. That's not interest. It's a prepayment of your estimated income taxes on that money. They're very different concepts. And what about Social Security taxes? People worry, when I start taking 401k withdrawals, do I have to pay the full 12.2% Social Security tax on that money? In most cases, the answer is no. Social Security and Medicare taxes, or FICA, are for earned income from a job. A 401k distribution is typically treated as ordinary income for federal income tax purposes, but it's not subject to those payroll taxes. Now for a really important connection. Do 401k withdrawals trigger Medicare surcharges and taxes on my Social Security? Yes, they absolutely can. Higher income can increase your Medicare Part B and Part D premiums through something called IRMAA. It can also make more of your Social Security benefits taxable. This doesn't mean you should never touch your 401k. It means you need a smart distribution plan. The goal is to spread out withdrawals over many years, mix withdrawals from different account types like traditional and Roth if you have them, and avoid those huge single-year income spikes whenever possible. Finally, you hear a lot of frustration that the system is unfair or that Congress could change the rules at any moment. While no one can predict the future of tax law, you can build a strategy that gives you more control. The best defense is a diversified tax strategy. Having some money in traditional pre-tax accounts, some in Roth post-tax accounts, and some in regular taxable savings gives you options. This way, you're not locked into one single tax outcome in retirement. The goal isn't to outsmart politicians. It's to give yourself the flexibility to manage your own money and avoid those nasty surprises down the road. I hope this helps clear things up. If you got value from this, please like and subscribe for more tips on making smart money moves. Thanks for watching.